Welcome to the new episode of Technology and Electronics News. I'm your host, Pavel Yankovich, bringing you the latest updates from the world of hardware. Let's explore together. Intel's unstable times continue as CEO Pat Gelsinger steps down under board pressure. Gelsinger, a 40-year industry veteran, aimed to turn around the struggling chip giant with ambitious plans like 5 nodes in 4 years and a renewed focus on foundry services. However, mounting costs, including $16.6 billion in restructuring losses in Q3 2024 and over 15,000 layoffs this year, failed to deliver quick results. Intel's market cap fell below $100 billion for the first time in 30 years, and it has lagged in the AI boom, trailing Nvidia and AMD. Its 18A node also remains behind TSMC's 2nm process in defect-free production, raising doubts about its ability to reclaim chip leadership. Two interim co-CEOs are managing operations at the moment, as the board evaluates potential successors like Marvell's Matt Murphy and former Cadence CEO Lip Bu Tan. Meanwhile, Intel has added industry veterans like Eric Muris and Steve Sanghi to its board, aiming to strengthen its chip-making and manufacturing strategy. Marvell Technology just pulled off a power move, overtaking Intel in market value for the first time. Marvell's worth now stands at a record $102 billion, after its shares soared nearly 23%, driven by strong demand for its AI-focused chips. Meanwhile, Intel, grappling with leadership changes and a declining stock, has dipped to $94 billion, its lowest in 3 decades. Marvell's CEO Matt Murphy says AI demand is booming, and the company is on track to surpass $1.5 billion in AI revenue for this fiscal year. As mentioned earlier, Murphy's name is floating around as a potential new CEO for Intel, but he insists he's staying with Marvell. With a nearly 60% stock surge this year, it seems like he's in the right place at the right time. In the meantime, the US-China trade war is intensifying, with chips and critical minerals at the center. After new US export controls on Chinese semiconductors, Beijing banned exports for gallium, germanium, and antimony, which are the key materials for chips, solar panels, and military tech. Antimony prices alone have surged 230% this year. China is also urging internal consumers to prioritize local suppliers, calling US chips as unreliable. Industry associations are shifting procurement strategies, affecting American giants like Nvidia, Intel, and AMD, while US chambers warn against escalating tensions. The impact is already real. German adhesives giant Henkel halted some deliveries due to delayed antimony imports, and US firms like United States Antimony are ramping up production. Yet rebuilding supply chains will take time and money. Both nations are tightening controls, leaving the tech and manufacturing sectors in a high-stakes standoff. Diversifying supply chains is no longer a choice, it has just become a necessity. Synopsys is feeling the heat from the US-China tech tensions as well. The chip design giant forecasted lowered 2025 revenue, citing tightened export restrictions that have left Chinese clients hesitant. Shares dropped 6.6%, though CFO Shella Glazer says their $35 billion Ansys acquisition is still on track for mid-2025. While Q4 results slightly beat expectations, their first quarter outlook fell nearly $200 million short. It's a pretty tough situation for Synopsys right now. Apple is set to launch its own cellular modem chips next year, starting with the updated iPhone SE, aiming to replace Qualcomm's technology by 2027. This move has been in the works since Apple's $1 billion purchase of Intel's modem unit in 2019. Qualcomm, which supplies modems to Apple under a deal lasting until 2026, has warned of this shift. Meanwhile, it's focusing on AI chips and laptops to offset potential revenue losses. SEMI Europe, the trade group representing over 300 semiconductor equipment manufacturers, is advocating for a CHIPS Act 2.0 to strengthen Europe's position in the global semiconductor race. Building on the 2023 CHIPS Act, their plan targets a 20% global market share by 2030, streamlined export controls, and integrating semiconductors into Europe's Green Deal for sustainability. They are calling for faster approval for tech projects, incentives for both foundational and advanced chips, and industry education collaboration to tackle the growing talent gap. SEMI Europe's president, Laith Altimime, says the comprehensive strategy is essential for securing Europe's semiconductor future and staying globally competitive. Foundry revenue jumped 27% in Q3 2024, fueled by strong AI demand and a surprising recovery in China. TSMC led the charge, expanding its market share to 64%, with robust AI-driven growth and plans to double its chip-on-wafer-on-substrate with silicon interposer capacity by 2025. Chinese foundries like SMIC saw utilization rates soar past 90%, while Samsung, UMC, and GlobalFoundries published ahead with advanced technologies and steady growth. AI is driving the foundry industry forward, but oversupply could pose challenges ahead. Those are the main updates we have for today. Thank you for joining us on Technology and Electronics News. See you in the next episode.